18.
155 points higher, 158. The Bank Nifty 400 higher.
We're up about 1.4% on the benchmark indices. The Nifty higher by 250 points.
So the mid-cap index is up around 1.8%.
What we have in our market is something we've become used to seeing. On bad global days, the markets don't fall, and on good global days, the market just goes to the races, and this is what the market's done. Despite the last 30 minutes of minor profit taking, it still has to go down as a really, really strong day. The market opened gap up, after that gave you another 100 points, and towards the end, shaved off those 100 points.
Hello and welcome. You're watching us here on Markets Today on CNBC TV 18. It was another day where the markets moved on, did well, notwithstanding the last hour of a bit of volatility, maybe some profits being taken home ahead of the big FOMC meet outcome, which happens this week. This is a show where we track 6 hours of day's trading action in 5 headlines, and let's talk about those headlines itself. Stock markets rise for the second day running. Sensex gains nearly 600 points. The Nifty gains almost 200 points. The mid-caps and banks also perk up. Canfin Homes slides after its CEO resigns. The move comes as a surprise given his clarification to CNBC TV 18 in May itself that he would serve his full term till September 2024. Analysts see this uncertainty as an overhang. Sources in the Reserve Bank of India pour cold water on non-banking finance companies hoping to issue credit cards, say the issue is not on the table right now, dealing a blow to NBFCs which distribute credit cards of banks they have tied up with. Natco Pharma gains on approval to launch a 2,000 crore rupee insecticide. Shilpa Medicare, on the other hand, gains as it gets a new drug launch. M&M CEO Anish Shah expects strong demand momentum to sustain in the coming months. He says that the company is working at 100% capacity and aims to ramp up capacity significantly. Also clarifies that automotive, tractor and electric vehicle businesses will not be separated in the short to medium term. That's an exclusive. And let's tell you what we've lined up for you on the show today. In Market Opinion, we have Hiren Ved, who joined us in our studios this morning. He's from Alchemy Capital. And we also have James Sullivan of JP Morgan joining in from the JP Morgan Investor Conference. The big corporate voices that we have on the show today: Anish Shah of Mahindra & Mahindra. And alongside that, we have Bharat Pay Chairman Rajneesh Kumar, former SBI Chairman as well. Okay, let's start then with the day's market action. Bulls maintained their momentum on the Lal Street. The Sensex and the Nifty gained for the second straight trading session. Sensex ended about 600 points higher. The Nifty almost 200 points. We saw big outperformance come by from the mid-cap index and the Nifty Bank. Nifty Bank actually gained over 500 points. Anush Chingal joins in with all today's market action.
Well, another day of big gains for the markets. The bulls in complete control of this market. Financials leading it. A couple of consumption names doing well. IT, of course, is still lagging relatively. There were big gains in the broader market today. Advanced decline looked quite good. And pharma made a big comeback. After a long time, we saw pharma actually, the top gainers were all pharma names, whether it was Apollo Hospitals, Cipla, Sun Pharma or Dr. Reddy's. On the Nifty, of course, in terms of the other prominent gainers, we had Eicher Motors, IndusInd Bank, Tata Steel, Titan, Hero, Asian Paints, Tata Motors, ICICI Bank, HDFC Life and Bajaj Finance. So financials, as I said, continue to do well. So these are a few names which did well in trade. Infosys and Reliance towards the end gave up some gains, and that's why Nifty came off the highs. In terms of futures and option stocks, well, big gains were once again visible in some of these auto names like TVS Motor, which was up about 5%, big gains in MCX, which was up about 5%, and in the broader market pharma names as well. Abbott was a stock which stood out. All in all, a really strong market going into the Fed events with almost no fear of any rate hike.
Indeed, no fear of any rate hike. And in Market Voices, we have Hiren Ved, who's the CEO, Director and CIO at Alchemy Capital, saying that the Indian market is structurally looking strong and that it is going to head even higher from here. And that's primarily on account of earnings growth that he anticipates will come by. And a lot of that will come in from some of the specific sectors. Manufacturing, for instance, has made a big comeback after a decade. Let's hear him out.
We continue to remain very, very constructive on the market. We've thrown everything at this market, right, for the last 12 months, right from rising rates to inflation to the Ukraine war, to the energy crisis in Europe. And despite that, if the market's just shy of its all-time highs, it's telling you something, that this is more structural. India is in a great position, despite all the challenges that we are seeing around the world. And I have no doubt that our markets structurally are heading to much higher levels than where they are today.
Right, and let's get in some opinion from James Sullivan of JP Morgan as well, who said that despite high valuations, the kind of growth that India has witnessed is not usual in the current context of the global market. And he has added that the best bet to make money in equity will be to buy the right stock and sector. In terms of selection, that is the crux to make more money. Listen in.
When we talk about the fact that valuation is very high, there is a reason for that. This type of economic growth is extremely scarce in global markets. You're seeing a significant investor rotation away from the very heavy index constituents in emerging markets, and in particular China, and towards not only India, but also the ASEAN markets, which are ultimately the outperformers on a year-to-date basis. So from a broader economic growth and asset allocation perspective, you're seeing very significant interest in India.
And to the second headline now, in an otherwise strong market, one stock which underperformed for the second day running is Can Fin Homes. Fell yesterday, 7% yesterday, and today followed it up with a 4% cut after the company's CEO resigned. The move came as a surprise given his clarification here on CNBC TV 18 itself, and that was as early as May, that he would serve his full term till September 2024. Abhishek Kothari joins in with how this impacts the company and what brokerages are making of it. Abhishek.
The MD and CEO of Can Fin Homes, that is Mr. Girish Kousgi, has placed in his papers and resigned due to personal reasons as mentioned in the press release of Can Fin Homes. So he'll be performing his duties till the date of his relieving comes in. However, no actual date has been mentioned in the press release. So just to alert our viewers, his term was to end in September 2024. So on 6th of May, we had the management of Canara Bank who had mentioned on air that there are corporate governance issues that they see in Can Fin Homes, and there were accounts which were identified as frauds. However, later on they did mention that the amount involved is less than 4 crores. So this news has come in as a negative surprise. We have Jefferies who have written on this update that they have a buy rating with a target price of 730, and they say that Mr. Kousgi's resignation is a setback that was not anticipated by them, and there is uncertainty around upcoming management change, which would be an overhang in the near term. Back to you.
Abhishek, thanks a lot for that. Brokerages believe this would be an overhang in the near term. But let's move on to the third headline today. We learned from sources that the Reserve Bank of India is currently not looking at allowing NBFCs to issue credit cards. This comes as a dampener for non-banks that presently distribute credit cards of banks, and they were hoping that they could be able to distribute their own credit cards as well, and that would mean better business prospects. But turns out that may not be on the table right just yet. Lata, more details on this?
Well, the fact of the matter is that the Reserve Bank is not considering this at the moment. Sources close to the central bank told us, and I'm quoting verbatim, this issue is not on the table right now. Now, it becomes important to clarify this because there has been market speculation that very strong NBFCs like Bajaj Finance may be allowed to issue their own credit cards. At the moment, they are allowed to distribute credit cards of other banks like Bajaj Finance distributes RBL and DBS, but they distribute that only into the top metros, whereas Bajaj Finance lends in a lot of tier 2, tier 3, tier 4 companies. So if they're allowed to issue credit cards, they can really mine that depth. But it is not on the table. Now, the reason why the speculation in the minds of investors came in was because Reserve Bank issued a fresh set of master rules on credit cards on April 21st. And there in that was a sentence, without the prior approval of the Reserve Bank, NBFCs shall not issue debit cards, credit cards, charge cards, either physically or virtually. Now, this gave the impression that with the prior approval, it is possible. However, when we asked these sources, they said it is a complete reiteration, a cut-paste of a rule that already existed, and nothing has changed, nothing fresh is on the table.
Nothing on the table. Let's move on to the big global market cue to track. The two-day FOMC meet begins today. The central bank, the American central bank, that is widely expected to raise rates by another 75 basis points. But this after the August CPI came in a tad above expectations. Some economists are also forecasting a 100 basis points rate hike. 75 basis points has been digested by the market so far. Remember, Fed Chairman Jerome Powell, in his Jackson Hole speech, did pledge that the central bank, the US central bank, that is, will use all the tools forcefully to attack inflation. He also added that higher interest rates will likely persist for some time. Let's also hear out what former Fed Chair Roger Ferguson and the former PIMCO chief Paul McCulley, as well as JP Morgan's James Sullivan, are expecting from the FOMC meet.
Fed needs to continue to execute the strategy they've laid out. I think 75 basis points is the more prudent move this time. And I think they have to signal in their, what's called their SEP, the Summary of Economic Projections, and also very importantly what Jay Powell to say in the press conference, that they're going to stay on that path. They cannot be dissuaded. And that is because I think inflation is the clear and present danger here. And I think they have to be prepared, and we have to be prepared for what Chair Powell called, which is some pain, i.e. hopefully a short and shallow recession. But getting inflation under control is job one, and moving methodically up this time 75 basis points and indicating more to come, I think is a better approach.
What's the terminal rate going to be, and how long are they going to stay there? And the marketplace has moved a lot since Jackson Hole and also since the CPI data. So you have a lot of nastiness already priced into the marketplace. And the issue really going forward is at what point will we see the Fed say that they're going to slow this down? What point are they going to start talking about the notion that we're going to reach a point and stay there for a while? And then the issue for the equity market is going to be whether or not it's going to be a softish landing or a recession.
So we do think the strength of the domestic economy is justifiably driving sector-level outperformance, particularly if the forecast is more of a global economic slowdown. At JP Morgan, we're forecasting the Fed rate to hit 4.5% next year, which is in line with the most recent Fed dots. We're expecting 75 basis points this week. One of the things that we're now starting to see developed market central banks respond to, and we think India will be at pace with this, with a 50 basis point increase rather than the 35 basis point rate increase that we had penciled in India, is the fact that the Fed aggressiveness is leading to very significant dollar strength globally.
All right, with that, we'll take a short break, come back. We'll be back in a jiffy with all the other headlines that we're tracking.